I've never met a single person that's comfortably retired off of a 401k. I'm still waiting for that day, right? But like all of us and all of your audience listening, we're all the same mindset. Like we need to take control of our financial future, right? And create some accountability and control over that. And so I think real estate is the path. I mean, it's the most predictable path to wealth.
What's going on, everybody? Chris Naugle here with the Money School podcast. And as always, I've got an unbelievable guest today. I've got a guest that doesn't come from the background that most other guests come from. So this individual was a captain for the Air Force. So first off, thank you for your service, but also an optometrist, which I have just gotten very familiar with optometrists when my vision, right dead square, right at the mid 40s, you just can't see as well. So I've gotten used to that, but I can see why he didn't stay an optometrist because, you flip that switch. How's that? That better? Is that good? All right, come over to this machine. All right, spit in the cup and look. No, I'm just kidding. But anyway, I can see where that would be a very dry business, but real estate is not. So Zach has literally carved a niche in this industry and one that I'm very familiar with. He's done a lot of things in real estate, from commercial to short-term rentals to ground-up development, which is what they really focus on today, and working with people like all of you to help you find your next rental, but in a very unique way. So, Zach, welcome to the show.
Chris, what an intro, man. Thanks so much. I'm excited to be here, and I appreciate you having me on.
Oh, my pleasure. So I love everything you do, and I even love your background more, So if we could just go back, I know, you kind of had a scholarship, and that was, for fixing people's eyesight. So let's just start there, like your journey from being an optometrist to becoming a captain for the Air Force. And again, thank you for your service. And every one of you folks, listen, like if I can, I'm just going to take a second. It's very important what I'm going to say next. For all of you listeners, if you're ever at the airport, you're ever walking down the street, you're ever anywhere and you see somebody that serves to protect our freedom in any line of the military, please just stop, pull their shirt, get their attention, and just thank them for their service. I was at the airport the other day flying home, and there was a young man, he was in his uniform and just standing there, and a bunch of people in front of him, a bunch of people behind him. I was 4 people behind him. I literally pushed my way through the line and pissed a couple people off just to grab the shirt sleeve. He turned around, didn't know what I was saying. I just said, thank you for your service. Lit up, big smile, thanked me so much. And I couldn't understand why everybody in the line didn't do that. I mean, our freedom is not free, folks. So anyway, get off that topic. But again, I think it's very important. So Zach, let's go back to those days of being an optometrist.
Awesome, man. And thank you again. That means a lot to me as well. And for anyone that's obviously serving the country, it's a challenging environment. It's not always about being in danger and being overseas, but there's a lot that you sacrifice just in the line of duty, and giving up a lot of control of your life. So, that means a lot to me. But essentially, Chris, as you mentioned, my wife and I were both optometrists by education. That's where we met in school in Oregon. I was on Air Force scholarship with the HPSP scholarship. So I went into I was commissioned as a captain into the Air Force. And I was running optometry clinics almost immediately. And that's where I started investing in real estate. I of course, as many people do, read Purple Bible, Rich Dad, Poor Dad, and all the whole series of Kiyosaki stuff, and just kept reading, and ton of knowledge. But I liked real estate because it's tangible, right? I'm a simple guy. I don't, stocks, everything else, way beyond me. I just liked investing in a tangible asset. But I used a VA loan, bought my first house, duplex, lived in half, rented out the other half, and thought, wow, this is a cool concept where I can essentially acquire an asset, live for free with little to no money down using a VA loan, and this asset provides tax benefits and appreciation over time, and then I can move out of it and it can be positive cash flow, right? And like rinse and repeat. So that was a birthplace. And then I just started to invest more and more. And so I've been investing for, I guess, almost about 15 years now, Chris. And I always tell people, like, and this, real estate is a long, arduous journey, right? Where it's full of bumps and bruises, but there's not been a single year that I haven't bought in property since I started with that first duplex. And that's really allowed us to, grow and be successful. So that's kind of my starting point. But
I love it. And you're right. Bumps and bruises. So folks, as most of you know, because most of you are in one way or the other involved in real estate, hopefully most of you are just being the bank. And, I think that's the ultimate, but that's just my opinion. But, my journey in real estate was very much like yours. It was, we started, and I think we started with rentals. I know I did, right after the Great Recession. And it was going great until I got caught with my pants down and the bank froze my loan, and then they froze my line of credit. And then that was it. I had to sell off everything. But then we started flipping, and flipping's great. It's a great way to carve your teeth. You learn a lot really quick, and you learn what to do and what not to do real quick. But you very quickly learn that it's a transactional business. You flip one house, you make your money, and then you got to do the next. Otherwise, you're not eating the next month or next year, however much you make. And then during that, you find out that flipping houses is just a cash flow nightmare. So some people learn about wholesaling, and that kind of fills the gap. At least that's what we did. We used wholesaling to bridge the gap of when we ran out of money on the flips. Then you'd sell the house, you'd have a bunch, but then we started taking some of our flips that weren't going to make as much, and we started renting them out. And then we learned, holy crap, this rental thing is really way easier, because we renovate the house. We then, instead of selling it and making the money, paying big taxes, we just rent it out. And then we enjoyed all the tax benefits of the depreciation. We had solid rent roll coming in. And that was all good and great up until the pandemic hit, when all tenants just decided in New York to stop paying rent. But that's a story for another day. But the reason I wanted to mention that is the bumps and bruises are real, but they don't have to be real. And listen, I'm going to go right into it, Zach, because I want to get right to the meat of what you do today, which I think is just a phenomenal thing. Every one of the folks listening to this at some point or another want to retire. Now, retirement means different things. It might mean the day you literally stop working your W-2 and you go and you start living your life. But to most of you, because most of you are entrepreneurs, retirement is just some fictitious name for the day where you get to start deciding what you do with your time. You will probably still work, but you'll work when you want and do what you want when you want, because you can afford to do that. So your company, Zach, Rent to Retirement, is perfect. Most people out there, when they think of retirement, in my 16 plus years I did in Wall Street, retirement meant a 401k. You just put money in blindly, don't even know what you're investing in most cases. And you hope and pray that when that age comes, 63, 65, whatever your retirement date is, you'll have enough money to provide you an income. And then after you start taking income, you'll hope and pray the market doesn't give way, because then all of a sudden you're not going to have enough money to make it. And then you'll hope and pray that you don't live too long. Those hope and prays are not what any of you should ever desire in your life. You want predictability, stability, consistent, persistent income, and that's what you do, Zach, but you do it uniquely. So can we just dive right into what your company does today and why it's unique in the space and how you do it?
Oh gosh, plus you just hit on so much though, Chris.
I know. I've been down the road, man.
that was gold though. But just to point out, I mean, man, I could just echo everything you said. I've never met a single person that's comfortably retired off of a 401k. I'm still waiting for that day, right? But like all of us and all of your audience listening, we're all the same mindset. Like we need to take control of our financial future, right? And create some accountability and control over that. And so I think real estate is the path. I mean, it's the most predictable path to wealth. But yeah, to answer your question, so Rent to Retirement, we're a turnkey provider mainly in the build to rent space. So essentially what we do is we identify the best markets throughout the country where we see positive investment opportunity, we see cash flow, we see affordability, we see economic and population growth. These are areas that have a housing demand. And then we develop our teams in those areas to essentially offer a turnkey product, which is a house that we either fully renovated or newly built, leased, and managed for our investors. So regardless of our investors' experience level, geographic location, whatever the case is, time involved, they can easily still build their investment portfolio successfully where they're not having to buy themselves another job. You talked about flipping and wholesaling. I've been through that whole route as well, right? And that's great, but that's another 80-hour work week. And it's a great way to...
Wow, you were pretty efficient.
Yeah, it's there's no off switch, and you make good money. You can make good money doing that, but yeah, you're always rolling it into the next thing, right? Like true wealth is created through owning real estate in good locations with good teams over time, and letting time do what it does with real estate, letting things appreciate over time, letting rents go up and compound, using debt efficiently, maximizing your tax benefits, and just rinse and repeat, right? That is the proven path to wealth. And we try to assist people in doing that by accessing deals across the country and diversifying their portfolio, where they can either get started or scale, tapping into the systems that we've already built in these areas. So that's what we do.
Yeah, folks, I was telling Zach before he came on, because he really didn't know anything about the podcast. So he was asking, and I said, listen, the fact that because he asked, is your audience going to be right for what I do? I said, they absolutely will. And the reason for that is you wouldn't be here if they weren't. And, coming in, reading his bio and understanding it, I know the business. And I know a lot of you just don't have time to go out there, acquire the property or the land, go through the plans, work with building departments, which all of them suck, work with the inspectors, ground up or renovations and all that, deal with contractors. God forbid any of you ever have to go and start dealing with contractors to get the property to the point. Then you got to go out there and you got to find a good tenant, and you got to do all the legal paperwork and make sure you're doing all the compliance stuff. And then after you get the tenant in there, you got to manage it, because they're going to have questions. The toilet's going to overflow. The light bulb's going to burn out. The dog's going to pee on something and rot it away, or kitty cat, whichever way you go. And that's all stuff you're going to have to deal with. But what they do is all of that for you. Just imagine you just go and do what you do because like, and understand what it is you do. And you just keep doing that. But you want to get into real estate, but you don't want the hassles that we just talked about. And I strategically, in the beginning, explained all those headaches for a very specific reason, because what Zach does is eliminates all of those headaches. All you need to do is identify an area, a property, and what you want. So your needs and your goals. I tell that to Zach. They basically will show you the inventory they have, and you just got to buy it. Which brings me to the next thing. And the reason I brought up 401ks is most people have one job their whole life, right? I was kidding. You have lots of jobs your whole life, which means you have lots of 401ks that a lot of times you either roll over to the next place or you move to an IRA. And then it's at some brokerage where you're hoping and praying that your returns are good, but you know that after this election, they might not be. So in this case here, you could just move those retirement funds into a self-directed IRA and then use your self-directed IRA funds, your retirement dollars, to then buy actual tangible cash producing assets that are managed by Zach and his companies. And now you just collect checks, predictable, consistent income. And that's just getting started, because one other thing that Zach does that I want to go to, and I'm saying too much. Normally I never talk this much for the guest, but I just love what he does. So I feel like I'm just trying to lay out the red carpet here, because I think this is something all of you desperately, desperately need to learn about. But once you get to that point, they also have lots of financing options for you, because some people come in and they want the assets and like, oh, I just don't have all the money to buy it. Zach, how would you help people that maybe are just a wee little bit short on the money to buy the turnkey property?
Yeah. And again, thank you for all of that, Chris. I couldn't have said it better myself, but we all run out of capital, right? That's the most limiting factor. Is you put money down on a property, you use leverage, and then guess what? Eventually you're out of capital and you have to decide how you can be a creative investor to scale. Our business, we've been successful over many years now, not just because we're selling quality new construction homes in good areas that cash flow and produce good returns, but mainly because we help our investors strategically scale their portfolio. The scalability is the name of the game, right? If you want true financial independence and generational wealth, which are buzzwords we hear about all the time, you have to build a robust and diversified portfolio, and you have to be creative to scale that over time. And capital is the most limiting factor. So we work with investors to access capital. There's a lot of different things you can do, and we help to coach them and build out a strategy so they can actually learn how to scale and strategically buy real estate continually over years. Our clients are our clients for life, as long as they want to continue to invest in real estate, which I feel is a lifelong journey. But to be specific, we help people look at different ways that they could access capital. This could be like a HELOC in some of their primary residence, or in an investment property, because actually there are very attractive HELOCs and HE loans available on investment properties. A lot of people don't know that. Like you mentioned, maybe rolling over a 401k or self-directed IRA to invest, bringing in partnerships. If you need to learn how to raise capital, we also have, things to do on that, and courses and communities where you can do deals with each other. But really the big thing is accessing creative financing options. Most people think, and most of our investors use conventional financing, your Fannie Mae, Freddie Mac loans, putting 20, 25% down, because we mainly do residential, single family, and small multi. That's our core asset class because it's predictable. And there's high demand in these areas. So that's great. But there's also many other loan options available. We have loan options where people can put 0% down. These are credit unions, local credit unions, where they offer 100% financing. People hear that and they're like, what? I mean, there are credit unions, and this is geographically dependent, where you can have 100% financing on a property. Now, that may not be positive cash flow. Just know that if you have 100% loan to value, right? And you don't have to put 0 down. You can put 3 or 5% down. They will finance up to 5 properties. We also offer seller financing options. We offer a lot of incentives where we buy rates down to 3.99%. There's just a lot of creative ways we can help people scale their portfolio strategically, depending on what they're looking to do. And as you grow your portfolio over time, you build equity. Just again, real estate doing what it does over time. There will come a point in time where you have equity in the house. Usually year 4 to 5, we see people either selling and 1031 exchanging to roll that equity into more deals, or maybe they're taking out the equity on that property or restructuring debt. It's all a dynamic process, and I know that you know this, Chris, but it's just about helping people put together a plan, right? And you said maximizing tax benefits. I mean, that is so huge. Especially, I know a lot of your audience are high income earners. Like, that is the easiest way to give yourself an immediate raise, right? It's just to reduce your tax liability, and real estate is the best thing to do that. For example, we can have people, buy short-term rentals where they self-manage it the first year. Even if they're not a real estate professional, they can still take accelerated depreciation because they're self-managing that first year. And that could be in some cases, a 6-figure tax write-off on a house that they just buy that first year, even if it's their first investment property. Now, it takes a little bit more work to do that. But second year, they could turn it over to our managerial team, So it's just creative things like that we try to work with people on.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up.
That's fantastic. So hopefully all of you got that no matter where you're at financially, there's probably an option. And the coolest thing you said, and this is something I understand very well, is you said community. You've built a community of people that are doing this. And I think that's also important because just like anything else, if you get in a room of people or you're around a group of people that don't speak your language or that aren't trying to do what you're trying to do, you're going to get nowhere. You're going to literally lower yourself to that level where what they've created is they've created that community of people that understand this and are doing more and more of this. So the more you get around that community, renttoretirement.com, you'll basically start to really get around the people that think the way you're thinking or the way that you want to be thinking, and that'll help get you to your goal much faster. And the other thing too, I was just on the phone yesterday and also today, 2 different individuals, both very high net worth individuals. One of them runs a company that works with family offices and hedge funds. We're talking about tens of billions of dollars that these people are moving. And, do any of you have any idea where these family offices and hedge funds are placing the majority of their capital in the tunes of tens of billions of dollars? Do you think it's giving Fidelity a call or Vanguard a call and saying, hey, you got any good mutual funds? We can put our, high net worth clients. We got about a $10 billion block of money. We want to buy some mutual funds. You think that's what they're doing? You think they're calling their broker, their financial advisor and saying, hey, you got any good stock picks or any good stock tips for us today? No. You know what they're doing? They're buying tangible assets, real estate. And they're trying to buy them, at a value and do exactly what Zach's team does. Build them up to the point where that can get a primo rent or a premium rent, I should say, which usually is ground up. Or, in some cases, maybe renovating if there's no land to be bought in a like a municipality. But that's what they're doing with money. So folks, I constantly say it. Why are you not doing what the wealthy are doing? I mean, did you not hear Warren Buffett just sold a ton more stock? Why is Warren Buffett, who's just a stock guy, why is he selling 13% of Apple? Isn't Apple such a great investment? Do you think they know about something that you need to know about? Folks, listen, I could say this now, and I'll say this probably as long as I live. The real wealth is going after tangible real estate assets. But the problem with that is that most people don't have the time, the energy, or the know-how to get the real estate assets to where they need them to be to do the passive income. But Zach, that's what you guys do. And I love that you do lots of ground up. So now can we kind of just get into the weeds a little bit? And actually, let me pause. Zach, if people want to learn more about what you do, where would they go?
We always want to drive people, Chris, to our website. That's renttoretirement.com. That's renttoretirement.com. We have our own podcast and YouTube channel. We put out a ton of educational material and market data, tools and resources, calculators. If you're in the car listening to this, you can also get on our email list by texting REI to 33777.
Love it. So check that out. But now let's just take a second and just dive into the inner workings of how your company works, because you acquire the land, you get the land ready to build, you rent, then you manage. So can you just walk us through how a client would engage and work with you on those levels?
Yeah, certainly. So the first thing we want to do is obviously have a consultation with the client and understand, what are your goals? Because everyone, I mean, we have a boilerplate to follow in terms of which locations do we want to invest in and build teams in. We know how many 3-bedroom versus 4-bedroom houses do we want to build in different areas based on demand. Like we have our cookie cutter formula that we know produces consistent results over time. However, each person is in a different scenario, right? So we want to learn what your goal, criteria, timeline, resources are, and essentially have a consultation with you to understand what you're trying to accomplish, and then try to match that with the right inventory in the right markets, right? And sometimes it's not a match, right? If, because we don't do a lot of like coastal areas, New York, California, these are more expensive markets that have more maybe volatility, but also have strong appreciation, things like this, more legislation. Like we're mainly in the Midwest and Southeast, core business, Southeast, right? Population growing, affordability. But the first thing we do is have a consultation. We don't charge our clients anything. We make our money through building and selling houses, right? Through any builder would. But we learn about what your goals are. We give you some action steps to follow. For example, if if you're not prepared yet financially, if you need to raise your credit, like here's some tools to go and do that. If you need to explore some different creative financing options, great. Here's some lenders, go call them and, learn about those different options. This is a normal purchasing process that you've been through with any property, right? So once we match the right property and market, that we have a team established and have inventory in, that we go through the normal due diligence, appraisals, inspection, financing, interview with your property management contact and making sure that they're going to be, you guys are, there's personality fit. We don't need to, fix that on the front end before you close. But essentially, once you close on the property, you get set up with management, you receive monthly income. Most of the houses are already leased at time of closing. If they're just finishing construction, they may not be leased at that time. But just really, it's about educating people through, what is the right markets. This is something that I didn't mention initially, but when I was first investing in real estate, I invested in my local market. I was in North Dakota, is where I was stationed, and I invested locally. It's an okay cash flow market and really not a great appreciation market, but I invested locally because that's what I knew and felt comfortable with. Once there was a point in time about year 4 or 5, Chris, where we started to invest out of state, my wife and I, where it really just changed the trajectory of our investing career, our business, our lives in general, because we're like, hey, why are we investing so much locally? And some people can invest locally because it's too expensive, right? There's high barrier of entry, too much legislation, whatever the case is. We're like, why don't we start to learn how to invest out of state where there's better opportunity, better cash flow deals, better ROI, better growth? And so once we've kind of learned how to do that, it just expedited our investing success. And that was really the birthplace of Rent to Retirement. It's just following the same process we follow. So a lot of what we do is just educating people about how do you invest in different areas, right? And we provide an easy way for them to tap into an established team. So you're not, having to build a ground up team in each area that you're investing in and just pulling your hair out trying to manage these things across the country. This is an easy way. Like our mission statement is to make the best deals across the country accessible to everyone. That's it. So that's essentially the client process they follow.
Well, I think that's really important. And, I will say, my wife and I have done over 270 flips and owned lots of rentals, but the majority of the stuff we did because of the TV show, we had on HGTV, we did them all locally. And I think that was definitely a big problem for us because we live in New York, in Buffalo, New York. So we're upstate, but it's still freaking New York, which is a dog shit state, excuse my language, but it really just is. I mean, and many of you might live in dog shit states that are just not good for rental or for real estate at any level. But that doesn't mean you should just say, oh, I live in a bad state, I can't do this. You have the ability, more so now than ever before in history, to do real estate anywhere you want. And a lot of people want to do real estate in their hometown because they want to drive to it. They want to feel it, touch it. Listen, when you got a rental, your renter doesn't want you there. They don't want you poking around, driving around, walking around. They don't want you mowing the lawn. They don't want you going there fixing things. They want a professional plumber, a professional electrician. And guess what? You can manage everything virtually nowadays. You can work with property management teams across the country that will then go out and professionally do all this stuff. Like at the end of the day, if you're doing real estate, isn't it just to make money? Like, isn't that the end of the day? It's not to go there and admire your property, kick the tires for the foundation and say, oh, this is mine. No, it's just, you want the check. So go to the areas where it makes the most sense to do what your goal is, which is you want to check. Let's be honest. You want to check. And if the checks are bigger and more consistent in the South, in the Southeast, as you said, and what was it, the Midwest? Midwest in the Southeast, then why wouldn't you go there, right? Don't buy in your backyard, buy in the right backyard, and then you'll have a lot more success. But do that with professionals that know how to do it. And the other nice thing about ground up, like what you guys do, Zach, is you're going to attract a much better tenant. You're going to attract a tenant that's going to probably treat that property like their own. Whereas if you buy just kind of a cheaper like property, maybe throw some paint and carpet on, as they like to say, you're going to attract exactly what that property was designed to attract. And sometimes I'll tell you, you're not going to like it because these tenants nowadays, they understand squatter rights. They understand all their rights. So just build the property for what you want out of it and actually don't build it. Let Zach build it. And then you just benefit from the income. So with that being said, as we kind of get to the end of this episode, Zach, what are some other things that you could tell the audience just about, rent to retirement or just turnkey rentals? Because I mean, I know we talked earlier, turnkey rentals, in some, realms have had a bad kind of I guess some war wounds, if you will, but I've never heard of, the turnkey rentals ground up. I've always heard of them. You're buying a property that a team went in and renovated it, and usually they do a crappy job. But what is your take on that?
Yeah, and thank you for bringing that up. I mean, we're trying to redefine the turnkey space, and I really dislike, as I told you before the show, is I really dislike the turnkey word in general, and it's a buzzword, right? Like a lot of these things, because there's a lot of people in the past and usually these are businesses that are around for 1 to 2 years. They'll be in the Midwest in Ohio or Missouri, and they'll rehab a house and put lipstick on a pig, and then they'll sell it to an out-of-state investor that never sees it, but sees a house that, oh, you can buy a house for $100,000, right? Oh, that's a down payment in my local market, and that's the ugly side of things. You got to be cautious of that, right? And so we always encourage people go through normal due diligence, right? Work with a reputable team. We have an exceptional reputation. If you can just Google us, and we've been in the business for over 10 years and growing consistently, and really help people. When you read our reviews, it's not just, oh, this great team, like. People spend time to go through all the bullet points of how we've helped them grow their portfolio over years. But yeah, to your point, I mean, what we found over time, because there are homes that we rehab, right? And we've transitioned out of working in lower income areas. When you have new construction, which that's about 75 to 80% of what we do right now is build to rent new construction houses. You hit the nail on the head. You're attracting a quality tenant. You have the majority of tenant demographics, right? You have more tenants applying in the house because it's new and everyone wants new. You have builder warranties on things, so it really reduces your maintenance and makes maintenance and capital expenditures much more predictable over time. So your holding period, you earn a true return versus if you buy a rehabbed house or an older house, a dilapidated house, if you flip it and my gosh, Chris, this with all the experience you've done flipping houses, it's like things still come up, right? You can fully rehab a house, but like crap comes up that you don't expect, right? And that causes fluctuation in returns. Being in good areas, investing in good locations with good teams where you're going to attract good tenants. I mean, that's just a recipe for, not to oversimplify it, but like if you just do that, buy in areas where there's an undersupply of housing. We have a deficit of 7.2 million houses in the U.S. It's the worst it's ever been. It's not getting any better. All the builders combined can't keep up with the inventory demand. But there's certain areas in the country where there's higher demand. We try to be below a median house price point in the US, which is around $400,000. We want to be in that $250,000 to $300,000 range. Again, that gives you the most upside with less fluctuation with market volatility. So, I could go on and on, but at the end of the day, I think it's just important to understand like what your goals are. If you're an investor that if this is your first house, or you're an experienced investor and you're looking to go to that next level or scale, just be honest with yourself, right? It's like, should you consistently buy in your local market? Is that where you're going to earn the best return? Are you someone do you want to be a full-time investor? If you do, fantastic. Then, roll your sleeves up. But for most people, to your point earlier, we're investing in real estate more for a lifestyle aspect. We want to create independence, and we like the idea of general passive income. But you only do that when you approach this like a business, and your time is best spent operating your business, identifying how to invest your money, hiring the right professionals, not necessarily being your own property manager, dealing with the day-to-day. That's just not the best utilization of your time. So I don't know. I know it's all over the place, Chris, but I love everything that you're saying, and I couldn't agree with it more.
No, that's good. And I love how you wrap it up with, spend time doing things that pay you the most, and I think a lot of people, they mow their lawn or do their laundry because they can, and so can we all. But is that the best use of your time? How much does it cost to have someone mow your lawn? Is it $20, $25, $30 an hour? Whatever it is. Are you worth more than that? The question always comes down to, why are you doing it when you could hire somebody else? And the only proper answer is when someone says, I just love mowing my lawn. Cool, man, mow your lawn. But like with this, don't spend your time just because you can doing property management on your properties. Don't spend your time just because you can renovating or going out and finding the properties. Find people that is their specialty. I'm going to bring this back to optometry. So if any of you have ever, had problems with your eyes, when you can't see and you can't read and you're getting headaches because you're trying to read books, and I know you all know what I'm talking about when you're doing this and you're kind of like, I think I can read that, and you're holding it way out here. That's at the point where you need a specialist. You need somebody that can diagnose what's wrong with your eyes. Like, am I going blind? You got something wrong. Maybe it's cancer. Maybe it's this. Oh my God, maybe it's a tumor. You don't just guess, do you? Don't you go see a specialist, an expert? If you had heart problems, would you go to your physician, your general physician, and say, hey, doc, I got this massive heart problem like thing going on here. Can you fix it? And your doc says, well, I don't know. I remember reading about that, in med school. I can open you up and see what I think. You're not going to do that, are you? You're going to find a heart surgeon that specializes in one thing and does one thing every day, all day. They're the best at the best. Like, why do people work with me? Because I do one thing all day, every day. I'm a specialist. Zach does one thing every day. Just work with specialists and take your time and spend it being the specialist you are and what you know, like, and understand. So renttoretirement.com, folks. I'll put it in the description again. Like, if this is at all interesting to you, you owe it to yourself to check Zach and his companies out. Get on a call with them. Like, see what they have to offer. That retirement money that's sitting there that you're so proud it's been growing, next year might fall 20, 30, 40%. Hey, listen, we're due for a recession. The inverted yield curve says that. So why don't you shift some of your assets, some of your money, including retirement dollars, into a stable, tangible asset that produces income? I think you'll thank us later, but maybe not. Who knows? But with that being said, Zach, dude, it's been an honor and a privilege. And again, thank you for your service and keeping us, safe and free in this country, the land of the free. But with that being said, just like all good things, this show must end right now. So thanks for joining us, folks. We'll see you next time. Zach, any final parting words?
Get out there and take action, everyone. We've all been sitting on the sidelines, or if you've been someone sitting on the sidelines because of interest rates, COVID, whatever the case is, guys, time is passing you by. Real estate works to your advantage. The longer you own real estate, find a way to invest, get out there and make it happen and take action.
Awesome. Love it. Get your lazy ass up and go get some shit done. With that being said, thanks for joining us for this episode of Money School Podcast. We'll see you next time.